Well, one headline continues to dominate the Tesla news this morning. That was the one from yesterday and the day before. Even as Piper Sandler offers a new note that might have turned the tide on Tesla this morning. There's a slight decrease in Tesla's numbers from their number one market. I'm sure that's keeping the stock under a little bit of downward pressure. And then there's no updates from on FSD. There's no updates from Austin. This could become a drag on the stock if we don't get any change before the end of the year. We need to see the safety rider come out. We need to see Austin increase the number of cars. What's going on, Elon? Come on, let's go. And then just this morning, the NFIB has thrown a lot of cold water on those small business job cuts reported by ADP and then JOLTS. Also, breaking news followed this morning with good news in the jobs area. Piper Sandler analyst Alexander Potter reaffirmed his overweight rating and a $500 price target on Tesla today. He noted Tesla is close to unsupervised full self-driving. He cited the FSD community tractor, which showed a 20x improvement in miles to critical disengagements after FSD 14.1, etc., the largest gain in 4 years. This spike followed by a slight dip when 14.2 and has boosted investor interest, he says. All right, so that's really good news, and that's probably why the stock is up this morning. Sawyer Merritt says this. He says, Jason Camisa, famous for his auto journal background and stunt driving, he tested the FSD 14 during an hour-long trip after being critical of FSD in the past, and he had this to say, quote, I had to eat my stuff and my words, and this effing car drove us the entire way expertly, making lane changes whatever it wanted with nothing dangerous. No jerks, no side to side, beautifully smooth. It effing pulled into the parking lot and backed itself into a parking spot. And then it drove us all the way back to San Francisco. This is door-to-door amazing. Couldn't believe it. Now, that alone should be the number one story of the day, even above the Potter reconfirming his numbers, way above the continuation of the Morgan Stanley story. But no, this story is only on X. That's the only place you're going to find it. In Barron's this morning, it says in November, the electric vehicle maker, meaning Tesla, just sold just over 73,000 cars in China, down 1% year over year for the month of November. This is according to industry data tracked by Citi analyst Jeff Chung. Through November, Tesla sold about 537,000 cars in China. If Tesla wants to avoid its first ever annual sales decline in the country, it would need to sell 120,000 cars in December. And that's unlikely. Tesla peak monthly production is around 100,000 vehicles. So yeah, we're not going to get to 120,000 cars in December, but remember this drop number is largely due to production being cut back, a ton in the first quarter. That should have been mentioned in this article. Tesla stock was down 0.8%. That was in the pre-market trading. That has all changed now. Chinese delivery numbers might have something to do with it. Tesla sales have been relatively weak around the globe all year, on track for the second consecutive annual decline. Still, coming into Tuesday's trading, Tesla stock was up 9% this year, and shares trade for about 205 estimated earnings over the next 12 months. Well, whose estimate are they using? They're not using mine. A year ago, Tesla stock traded for closer to 120 times earnings. And once we get some real earnings estimates for next year, it'll drop down closer to that. Almost every headline about Tesla today is still about the Morgan Stanley downgrade from overweight to equal weight. But you have to actually read the article to find out that they also increased the base case from 410 to 425. Almost all of the articles mention that somewhere. But some of them don't even mention that they increased the bull case to 860 from 800. Also buried, if mentioned at all, was the headline that $60 of this valuation is now for Optimus, the first time that they've included Optimus into their program, into their overall analysis. And then if you really read deeply, you find out, and maybe it's a one-sentence deal, that they're now looking at the tranches that Elon is going to be trying to do and trying to evaluate which ones of these do they think he'll make and what impact that would have. They think, by the way, that he will reach 7 of the 12 goals by 2035. The reporting on the Morgan Stanley thing, pathetic. This is Randy Kirk, by the way. Did you know it's only 14 days until Christmas Eve? And some of you are 6 days away by UPS. I'm sorry, USPS, which is what I use. So it's time to get your orders in for this. You get your orders a lot faster from Amazon if you need to buy the book. But it's time to start thinking about that. Okay, and then but only buy either one of those products for people that you care about. What else do I need to tell you? Oh, yes, please hit subscribe. You've been doing a great job. I just need more of you to do it. I really appreciate hitting the subscribe button again because the subscription numbers were just crazily low. I don't know what was going on. All right. This morning, this was really big, but you won't see, you'll have to search for this headline. For some reason, they don't pay any attention to the NFIB, which is the National Federation of Independent Businesses. Their index rose 0.8% in November. Rose. Wait. Small business is supposed to be in trouble. 0.8% to 99% to 99, which is up from 91 to 99. That's a pretty big increase. And that's above its 52-year average of 98. Of the 10 optimism, I got that wrong. That would be from 98.2 to 99. I'm very, very sorry. Of the 10 optimism index components, 6 increased, 3 decreased, and 1 was unchanged. An increase in these expected an increase in those expecting real sales to be higher contributed most to the rise in the optimism index. The uncertainty index rose 3 points from October to 91. An increase in owners reporting uncertainty about capital expenditure plans over the next 3 to 6 months was the primary drive in the rise of the uncertainty index. This is shocking that people are planning to spend capital when they get the big tax breaks. I'm very, very surprised by this. Maybe it hasn't really hit them yet. It says, quote, although optimism increased, small business owners are still frustrated by the lack of, wait for it, qualified workers. Despite this, more firms still plan to create new jobs in the near future, saying nothing about laying people off, saying nothing about getting rid of people. As reported in NFIB's monthly jobs report, a seasonally adjusted 33% of all business owners reported job openings they could not fill. That's up 1 point from October and the first increase since June. Unfilled job openings remain well above the historical average of 24%. Of the 56% of owners hiring or trying to hire in November, 89% reported few or no qualified applicants for the positions they're trying to fill. A seasonally adjusted net 19% of owners plan to create new jobs in the next 3 months, up 4 points from October. The last time hiring plans reached this level was in December. So young people that are graduating from college, if you are trying to find a job, maybe you should be looking at small business instead of the big corporations and government. Maybe that's where if there's apparently a lot of jobs. Unadjusted, 39% reported higher average sales prices, up 8 points, and 8% reported lower average selling prices, down 4 points. Looking forward to the next 3 months, a net 30% plan to increase prices unchanged from October. We do have to remember that when these companies are increasing prices, they might be increasing them by 2% or 1%. And the Fed hasn't changed their mind. They still want prices to go up 2%. They get very, very sad when prices are not going up. 23% of all owners reported borrowing regularly was unchanged. So I've been talking about that for a very long time, and I've been saying for a very long time that business owners today are older and they've been in business longer. So I decided to ask Grok whether I'm right about that rather than just continuing to go off, I don't know, my 60 years experience in looking at small business. I asked Grok, and Grok says, yeah, it's true much older than in the past. Even new business startups are now an average of 45 years old compared to 33 50 years ago. Small business owners average 50 years of age right now versus 38 50 years ago. So yeah, much, much older, much, much more experienced, much, much more solid than when I started in business in 19, my first bike, my only bike shop would have been in 1971. Yeah, 1971 is when I opened my bike shop. It appears that I'm not alone in estimating that Chairman Powell will have hawkish guidance to go along with his 25 basis cut tomorrow. Now, the 25 basis cut could not happen also. We could, Larry said he's only given it like a 33% chance of happening tomorrow. The markets are saying it's 89%. But anyway, this continued uncertainty and the concern about the hawkish report, which I've been talking about for 2 weeks now, is spooking the interest rates on bonds today. Jamie Dimon adds his voice to Elon's regarding Europe, and Phil Beisel posted this. JP Morgan CEO Jamie Dimon criticizes Europe's growing bureaucracy, calling it a serious obstacle, and adds that their own bureaucracy is driving businesses out. They're driving investment out. They're driving innovation out. Europe, you're going to have to figure it out. I don't know what's going on. All right, here's the breaking JOLTS numbers. This morning, the number of job openings was unchanged at 7.7 million in October, according to the U.S. Bureau of Labor Statistics. Both hires and total separations, little changed. Layoffs and discharges, little changed. The release includes estimates of the number and rate of job openings, hires, and separations for the total non-farm sector by industry and by establishment size class. Job openings included all positions that are open on the last business day of the month. Hires and separations included all changes to the payroll during the entire month. So job openings, the number and rate of job openings were unchanged. 7.7 million job openings. And you can't find a job? Something's wrong. 4.6, respectively, in October. I'm sorry. What? I don't understand what that means. The number of job openings decreased in federal government by 25,000. Well, there you go. Keep on. Hires in October, the number and rate of hires were little changed at 5.1 million. And the rate was 3.2%. Okay, so there you go. So I know all of what I just said about the NFIB report and the JOLTS report would tend to give you a little tick down in your anticipation with regard to the Fed cutting rates tomorrow, but I think they're going to cut the rates. But I do think they're going to be hawkish, and I think that's going to maybe upset the markets tomorrow. On the other side of the coin, people are still mentioning that most of the hedge fund managers and most of the funds, the mutual funds managers are behind the S&P for the year. So there could be a rush. There could be the Santa Claus rally still coming up, and that could overwhelm everything else. Trump this morning is up from his really super low 43% yesterday, back up to 44 under Rasmussen. The GDP Now model is out with a new estimate for real GDP growth, and they've adjusted it down now to 3.5%, given the fact that they are commonly only off by a maximum of 0.5%. That would suggest we're either at 3 or 4% GDP increase. Either one of those would be astronomical. After this morning's personal income and outlays report from the U.S. Bureau of Economic Analysis, the nowcast for the third quarter real personal consumption expenditures declined from 3.1 to 2.7, and that's what caused this decrease. So if folks ain't spending the money, well, the GDP is not going to increase as much as they thought. Trueflation up a little bit this morning. Trueflation index 2.54, and the overnight's goods up a teeny bit, 2.42. The core also at 2.42, up a little. Services 2.76, headed back up towards 2.8 again, and the PCE also up a tiny bit, but still sitting at 2.23. All right, now that's all the data, that's all the stats, that's everything that you need to know today about what's happening in economic estimates. And so let's go see what impact that's having. Well, we'll start with Tesla, who is at 44.38. That is up 1.09%, leading the pack after yesterday's, well, what happened is you got bargain hunters, and then you've got Potter coming in this morning and saying, no, everything's okay. You got the Dow Jones up 0.19. You got the NASDAQ down 0.07. You got the S&P up 0.09. So little changed, flat, flat, flat. Should probably going to be flat tomorrow morning too. You've got the Magnificent Seven, except for Tesla and Amazon, all down. And Amazon's only up 0.33%. So right now, the Mag 7 down, the VIX is up, but not as bad as it was earlier. So I guess it saw the JOLTS report and NFIB and decided, everything's probably fine. You've got the Cathie Woods are basically down this morning, except for ARK, K, and Block, which are up fairly nicely. Okay, let's go ahead and look. Last time I checked, the bonds were not, they had gone down in the overnight and then are unchanged right now, but still at 4.17. I'm saying that tomorrow, after the Fed makes their move, even with the hawkish sentiment that I think is going to happen, we don't know, but that's my estimate. I think we go back down under 4.1 actually, and maybe over the course of the next month or so, even lower. We're getting closer and closer to the Fed changing the chairman in May, and I think the market's going to start to be looking way ahead at that. We've got oil down another 40 cents this morning, 58.48. Natural gas down 3.6 to $4.73. Man, that's getting down there in pretty good, a pretty decent price again. You got gold up $9 this morning, 4,227. Silver up 2.21%, back almost to $60 again. Copper down 1.88 at 534. It has relaxed a little bit also. I saw a big headline the other day that said, oh, the commodities are going to just go screaming higher. I don't believe it. Don't think it for a minute. We've got the dollar mixed, of course, this morning. In fact, the headline even says it's steady. You got Bitcoin up 272. That's almost unchanged. And Ethereum also up 0.27%, 3,139. That's doing a little better. And there you are. Those are the numbers. Later on today, a regular day, you're going to have Nicholas Gibbs, who now he's starting to maybe take over from Larry as number one, although CERN Basher is right up there too. Brian Wang, he gets really solid. Well, I don't know, maybe, but yeah, but Nicholas Gibbs, he gets really, you guys really starting to like him. Okay, anyway, he'll be on, and then Brian White right after that. We have got, again, 14 days, 14, that's not even shipping days, okay? It's less than that when you come to shipping days. If you want to get your orders in, I've got about 50 of these left. I'm not going to reorder at this point, way too close to Christmas. So there's about 50 left. If you want to get your orders in, I suggest you get going. Don't forget to mention if you want it to be in stainless or you want it to be in camouflage. With regard to the book, of course, the rule on the book is only get the book for people you care about. Do you know that last night I'm forgetting his name. It's such a hard name. Anyway, the head guy over at Google Deep Think. Anyway, he said, look, AI is going to be the biggest change and it's going to impact everybody. We had another report out this morning from another leader in the AI industry saying half of white collar jobs are going away. Don't you want to help your friends? Don't you want to help your family members? Don't you want to help your associates? Don't you even want to help your neighbor? Maybe even help yourself to understand these changes? That's what we deal with in the book. We look at all the changes. We look at what's happening with, anyway, you get it. It's time to buy the book. All right, let's take one last look at Tesla this morning. Oh, last night. Oh my goodness. Larry Goldberg and I, we had a great time. You're going to want to go look at that one for sure. It was absolutely stunning. I'll put that card up, and Tesla right now is sitting at 445.48, continuing upward, pretty much in a straight line. Yeah, remember what I said yesterday? I said I thought the stock would rebound yesterday and we would end up above 440. We did end up at 440 last night, but barely. I think where will we end the day? Maybe around here. I don't know if we'll get back above 450 again, but it's possible. Just kind of depends on what other news we get as the day continues on. All right, this is Randy Kirk again. It has been great, as it is every day, talking to you.